Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news there have been some unusual events overnight, and that's putting it mildly. Canadians are voting in federal elections, ones where the winner will need to tackle a weird US administration. The US president injected himself into their campaign at the last minute with a claim Canadians should vote for him to make Canada the 51st state of the US. There are no exit polls yet, but it is likely to steel Canadians to reject the call in record numbers, whatever the result is. The clear instability of the Trump action saw Wall Street fall almost immediately, but it has recovered slightly since. There are also nerves on Wall Street about some impending big tech results out soon. In the real world, Canadian wholesale sales slipped 0.3% in March. In the US, the Dallas Fed factory survey dived to its worst level since the pandemic, and before that, its worst level since early 2016. The fall was worst in new orders. Inflation rose, confidence in the future weakened. The US oil patch isn't a happy place. In Europe, we should probably note that there's been a major electricity grid failure in Spain and Portugal, with much of those countries blacked out, although services now being restored. Separately, a key ECB figure said the European Central Bank may cut interest rates below the neutral level that keeps the economy in balance. He said Eurozone inflation may come in lower than expected as a result of American tariff actions and require much looser settings. In Asia, India said its industrial production rose 3% in March from a year ago, similar to the slowdown reported in February, and a lot more tamer than the expansion rate has been recently, although back to its long-term average. This is not evidence their economy is booming from manufacturing. In China, their central bank is signalling both rate cuts and reserve ratio cuts are on their to-do list at the right time. Both will boost liquidity and shore up economic wavering. Singapore's unemployment rate ticked up to a little, but only to an historically low level and only back to its long-run level. Singapore has a national election on Saturday, May the 3rd. No surprises expected in a contest closely controlled by their ruling party. Australia's federal election is on the same day, and that outcome is a lot more uncertain. Australia is one of the very few countries to have a AAA credit rating from both Moody's, Fitch and S&P. Now, analysts at Standard & Poor's are openly concerned about the cost of election promises in light of their budget forecast that earlier showed long-term deficits rising. Election victory might be a bit of a poisoned chalice if it comes with a downgrade, high debt servicing costs and rising deficits. Public policy choices then become very hard, very necessary and very unpopular. The US Treasury 10-year yield is now at 4.21%, down 4 basis points from this time yesterday. The price of gold will start today at $3,336 an ounce and up $17 from yesterday. But oil prices are down $1 at just under $62 a barrel in the US, while the international Brent price is down a bit more, now just over $65.50 a barrel. And the Kiwi dollar is now at 59.6 US cents, unchanged from Saturday at this time. Against the Aussie, we're down 30 basis points at 92.9 Australian cents. Against the euro, we're also down 30 basis points at 52.2 euro cents. That all means our trade-weighted index starts today at just on 67.7 and down 30 basis points as well. And the Bitcoin price starts today little changed at $94,137 and down just 0.1% from this time yesterday. Volatility of the past 24 hours has been modest at plus or minus 1.4%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.